Okay, here's the technical and cyclical view of BTC Bitcoin now. This is the monthly chart. DAX. Those guys tend to have a little bit bigger flows. um, so guys, on the monthly level, there is a cycle that's been developing. I mean, Bitcoin's been around long enough, so this is pretty interesting. Let's just zoom in on this. The slow stochastic is a very nice oscillator. An oscillator is equation of motion. We care about that when we want to analyze how things move, energy, okay, physics. So this oscillation's been really taking place since November. And just because you're high within the cycle doesn't mean that price has to top out. I mean, if that was the case, if price followed highs and lows of a cycle, the market would go sideways for forever, because cycles are about a rhythm through time, right? A pendulum swing. And so obviously that doesn't happen. The point is that when you're high within the cycle, you should be taking profits that are in front of 20,000. Now you're still playing out this monthly cycle, and the fact that these monthly cycles were low, meaning the reading on the side here is in the 70s, it doesn't mean that we have to cycle all the way back to the low end of the range. We could easily bottom out here, as this cycle's done before, right around the 70 range. So that's kind of what I'm watching. You want to watch the slower line. This percent K is the faster line. That can be a little bit deceiving to your eye. You see here that line's already at the lows. That's not what you want to watch. You want to watch the red line. And then when that crosses, that's just gives you confirmation of the turn. It helps you just sit through the cycle, full cycle. All right. This reading, this setting does a pretty good job. Now, that just covers right the time component. And when you look at price, the RSI is really not that helpful. I always talk about angle and distance. Rate of change matters. How something got to a certain place matters. When you go vertical in a short amount of time, that's pretty obvious that, again, you don't want to be chasing. We created a lot of angle and distance from the 8. We've closed that gap now. So the next thing that matters, I have something that we're going to be coming out with some analysis in what I call our pivot and reversal system. So these levels in the market, everything is fractal. So meaning that when a smaller time frame trend breaks, the market will have a tendency to fall to the next level it might be in a different time frame. It might be another pocket in the market where there was a lot of orders or a lot of trading that went on, what we call support and resistance. So sometimes the market will gap down, but that'll tend to happen in these points. And so you took out the prior monthly close in December, you take that low out, that leaves room for you to test the 8 here on the monthly. And you'll see in a minute, the 8 on the monthly happens to be an area on the daily chart, which we call pi. That's what I mean by our model's fractal. Okay, our pi line is on the daily chart, basically right at where we held. So on this monthly chart, if we don't hold this area, if we can't hold 6,000, then you should expect the market to decline into this 2,800, 2,500 area. It's not very level specific. It's more of an area that matters. Okay, but overall, this is still a long-term bull market. This is most likely a 2 to 3 month reaction. We put in another higher low relative to these lows back here. Okay, and it is what it is, just an uptrend, higher highs and higher lows. When we go to the weekly level, now you can see this fractal area here. So what happened is we broke 12,000 here on the 8 week, where your market held once, 2 times, 3 times, really 4 times, and then broke. That allowed room for, once we elected this daily pivot, okay, we elected that reversal, you can fall back to this pivot down here at the bands, which is right, again, 6,000. It's going to be the pi line that I'll show you in a second on the daily. Now the cycle, so that's the price, still in an uptrend. Very logical place for us to hold right there at the bands. That's why I use it. It just does a really good job. And then that's where you tend to get higher lows in an uptrend at or near the bands, the big reversals. And then, we've had this kind of, I don't like to really be technical or drawing trend lines on the cycle, because it's not really the point. But nonetheless, I mean, that clearly was going on here, and we broke that for what that's worth. But really right here, boom, we've been in this down cycle. So we could turn up here, just like we did about at these same levels around 40 last time. Or we could just let this play out into March, is kind of where, if you continue this forward in time, it plays out maybe at the end of February here, beginning part of March. So that's kind of what my call is. If we can't hold here, then we should collapse at least into March, probably around that 2,500 area. I'm not saying that's what I think is going to happen, but analysis should be about if then. Tell me what the price of Bitcoin could be. I can give you a $30,000 price prediction for several reasons. I can tell you why it's going to go to zero too. I can make bull case, I can make the bear case. That's not really helpful. We got to know when. What if we go to zero, then we go to 30,000? What if we go to 25,000, then collapse all the way back to 1,000, then go back to 30,000? If you were waiting for 30,000 to sell, from a timing perspective, good luck holding from 25,000 down to 1,000. You won't. So timing matters more than valuation and fundamentals. And you can always change the fundamentals to match whatever is going on. But markets move in anticipation of things also. They don't trade based off of what is happening or what the fundamentals are. They trade off of anticipation of what they think the fundamentals will be, or blah, blah, blah. All right, guys, so that's just what the cycle is doing here from a price perspective on the weekly and a time perspective. And then we go to the daily. I don't use RSI that much, just because it's pretty simple. You can tell when things are overbought and oversold by just having experience trading. But all these big pullbacks have been met when we got very oversold on the RSI. So we held pi with this oversold RSI. That does a really good job. Just like we were very overbought up here, Smart money guys that want to start funds, they didn't want to do it up there because they knew, we were just overdone. That's why we were selling take profits up there. Any good trader was saying that same thing. All right, so obviously we've been oversold. The last 2 weeks was telling you that before an RSI, but maybe, that's the right levels, that maybe that was it. It's a very good chance that was it. I'll tell you in a second here what we can look at for confirmation, but there's the daily cycle. Pretty low. So the daily cycle is good for 3, 5, 8-day moves, sometimes longer. All right, but this cycle was pretty low here, and we had a 4-day bounce followed by another cycle down. So we're still lower than that cycle. And we held pi. This is our dotted green line here, is our pi line. That's 314 period moving average. I just decided that pi is a perfect cycle, 3.14. It shows up across everything from mathematics to physics to just, there's evidence of it all over the place in nature. So it's just a fundamental design of the way things are. And so you put a 314 period moving average, it works great because it's accounting for X amount of units of time. And so embedded in that line is somewhat of a cycle here, away from it and cycle back to it. All right, so not surprised that we held there. We go to the 4-hour. I think what I was trying to make on the if-then analysis point is we want to say, if the market breaks this, then this can happen. The probability, if this happens, then this could happen. Or if we break this high, then I'm going to buy, stop below the low. If we take out this low, we can fall to here. That's how we want to think about things, not just making grandiose calls. That's just not helpful. It needs to be if then, if then, if then. So if we can hold 6,000, come back down here and create what we call a phase 2 higher low. I'm going to nibble again, but really to turn this intermediate term back up to bullish and get this momentum back really positive is we need to take out these lower highs here. This has been the trend. Lower highs, lower highs, lower highs, and lower lows, right? This is a higher low. These are higher lows. Those are always the first sign that maybe the market's turning, but you couldn't make a higher high, and sure enough, you break that trend consolidation, you're back to lower lows. So right now, we're in the process of creating this next pivot, most likely. So we could fall here, make a higher low like that. We could double bottom. We could just fall to a new low. Anything's possible. Could also create a V bottom here and just go right through this pivot. But this is the pivot that matters right now in front of 10,000. If you get above there, then you're going to turn the intermediate term technically back to bullish. That's what I'm looking for. But we could also be cycling out up here and creating another pivot. You don't create the pivot till you move away from it. That's what I keep telling my guys. So if that's the case, then our next pivot will be right here in front of 9,000. All right, that's just the reality of the situation. This is the intermediate term downtrend that we've been in. Anyway, guys, I hope that helps. Watch the risk here down to 6,000, very major level, long-term, weekly and monthly levels, right? We're still bullish overall, just waiting to add and get more aggressive on this side of the cycle. With the turn up above this pivot, start making higher highs, then that's the time to be more aggressive. So we'll see if we get it.